Welcome back. Should we buy or sell the education ETF? So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So, the educational sector is categorized as consumer defensive, and we do see that this one is 10% from the low, but we have seen a very astonishing minus 63% crash. So let's just jump right into the chart here. So this is weekly data points, and we do see that there was a rally here in 2020 that peaked around February of 2021, and then we did see this absolutely spectacular sell-off. When you see a chart like this, obviously the bears are in control, but it also is a fact. It is a reality that between this period and here, this ETF rose 46%, so people were bullish. And now people are extremely bearish. The fact of the matter is that for a long time, people were very bullish. They looked at this ETF, the components, and they saw a lot of future opportunities. And let's be clear, this is not a single stock, this is an ETF. So I think that, there could be some interesting opportunities here for this ETF, but we have to explore further because we obviously have a very protracted downtrend. The funny thing about how percentages work is that from a low level, the move up can become very, very big. Just to get up to these highs is a 167% gain. That is very big. To get a 167% gain from this high, it is possible, but that is much more difficult due to the way market caps work. If we go to the daily data points, that is when it becomes very interesting, because a key thing about this entire downtrend, that is this purple 20-day moving average. It formed, as you can see in these red arrows, surgical resistance, but it also has, in the blue arrows, also offered decent support. What is very interesting at this point in time is that last week, we started to use the 20-day moving average as a support level, as you can see in these huge blue arrows. Obviously, this is still early, for sure. It is fully possible that the bulls are not going to be able to get enough buyers here to make it a sustained low, but this is one of the best opportunities we have seen in a long while for the bulls. If we zoom out a bit, we also have the possibility of forming a much longer term rounding bottom. So if we do form a low here, then that is another very key technical pattern that is beneficial to the bulls. But we must explore further. Okay, so here are weekly data points, and here we have these other indicators here to the right. We did get a buy signal here on the MACD on the weeklies. That is a very interesting thing. You see that the MACD sent a sell signal back here, and this is a very clear difference. We are extremely oversold still, both in terms of the RSI and the PPO, which measures the distance between the 20 and the 50-week moving average. Going to the daily data points, we did get a very interesting buy signal here on the MACD. Looking at accumulation distribution, we would ideally want to see a bigger rise. So there is some volume here, bullish volume, but it is still limited. When we look at RSI, we do see some higher highs and higher lows. RSI was rejected here from this high that formed back here and here as well. So due to the protracted downtrend, you see here that RSI has developed its own range. So generally speaking, you have this phenomenon where this is overbought RSI and this is oversold. But what has happened here in this case is that you see that this is the high for the RSI and this is the low. And that is a very key thing when looking at RSI, is that for certain securities, it develops its own overbought and oversold levels. So that is a key thing to watch going forward. We do want to see RSI actually rise in this case. Having in a high RSI overbought, that is, could be a potential a bearish setup for a lot of securities. But in terms of these very oversold securities, then you do want to see the higher levels start to be explored a bit more, because that is a key thing about the trend change. The market has now opened, and it is interesting to see that so far we are holding that purple 20-day moving average. Still very early, but that is definitively what we want to see now. The 20-day must hold. In terms of seasonality data, we only get it from stockcharts.com because this one has not been public for more than 2 years, really. 2 full years. Well, at least 2 years, 2020 and 2021. The seasonality is very bullish for February, but we do have very little data, and March is extremely bearish. To be perfectly clear, we have so little data about seasonality that we should take this with a grain of salt, okay? But this is the data we do have. Finviz finds this trend channel. That is also something to have on your radar, but I do think that the 20-day moving average is simply more relevant. The interesting thing about this ETF is that it actually is optionable, so you can get a bit fancy in terms of strategies. So let's quickly read a bit about the ETF. So, it provides a unique take on equities with high exposure to the education theme. Companies that facilitate digital learning, educational content publishing for education at all levels around the world. When we compare this ETF against the S&P 500 and we go here to performance, then we do certainly see that this ETF has dramatically underperformed the S&P 500. There is a dividend, but it's almost meaningless at 0.11%. If we go here and look at some of the holdings, then we do see to the left here the education ETF, only 30. So you have some famous names here: Coursera, which is very much digital education; Pearson, more old school; John Wheeler and Sons, also a bit old school; then Zoom, very modern; Kahoot, also very much potentially the future of educational technology. Here's the sector breakdown, and here we do have some market cap. You do see here that mid-small caps certainly dominate, and you have a tiny percentage here of large caps. So it's a very interesting situation here in terms of market cap. Because these companies are, generally speaking, small, it means that good news for these companies will have a much more dramatic effect. If we had like if you take the situation here with the S&P 500, it is composed of very large cap, obviously, companies. They need very good news to move substantially. That is just how market caps work. So this is basically a very interesting situation here in terms of these current lows. Very dominated here by United States and China. Well, China is second place, but there's obviously a very big difference between 54% and 10%. Looking long term, we get absolutely no correlations, but that is not a huge surprise because this is a relatively fresh ETF. Here we do see on these daily data points that we have 54% negative correlation with the S&P 500, minus 79% here with the Consumer Staples ETF, XLP, minus 90% with the dollar index, and minus 76% with the US 10-year yield. The strongest correlation we get here is actually with the dollar index. So let's do a quick technical analysis of the dollar index because it is most likely to have an effect. So it was a very negative correlation, which means that the dollar index going up is then, generally speaking, negative for the education ETF. We do see here on the daily data points that the dollar index here, it has been rising recently, and it is trying to push out above this massive resistance zone here. It has made progress already. So it is interesting to see that there is this strength here in the recent candlesticks, because A breakout above these resistance levels will obviously be beneficial for the dollar. Then again, it is currently at levels where the rallies have failed many times in the past, as you can see. So yeah, this is definitively to be determined, but this is something to have on your radar in terms of the education ETF. A breakout here would, based on the correlation, most likely be negative. Okay. Here is the education ETF against the consumer staples ETF. They are in the same, well, they are in the same sector, yeah. What is a bit interesting, potentially a bit bullish, but only a bit, that is what we see here. If you look here at this low, this candlestick formation looks a bit similar to this, which again looks a bit similar to this. You see that here we did get a little bit of a rally, here we got a little bit of a rally, and yeah, it's basically very similar to the setup we have at the moment. If you look at the previous times where we formed these lows, then we did see at least a couple of weeks of rally. So here we got 1, 2, and 3, and then we fail. Here we got 1 and a 2. Here you could argue, yeah, we are on the 3rd week now. So the way we could see a fundamental change here in this relationship would be that we get at least another week here of rally, because that would be a clear sign for the bears that there is some change here in the air. Let's look at the education ETF against the S&P 500. Yeah, here we see a very, very similar relationship. We do see some, if we go here to the daily data points, then I think you can see it in a bit more detail. We do have this trend change. So if we measure a bit here, well, compare a bit, I guess. So here it is very clear that the education ETF is substantially weakening against the S&P 500. But recently we have seen a change, it is moving more sideways. And that could be a sign that the next step will be more like this. That is obviously to be determined, but this is how lows are formed. Another pattern that jumps out to me here is this potential inverse head and shoulders pattern that is in development. That is a key formation at lows. Let's then look at education ETF against the dollar index, like that. Okay, so let's get the chart. Yeah, so this is the chart here. This one is certainly weaker than what we see in the two previous, in the sense that the dollar is definitively significantly stronger, and the education ETF has not really started to form any clear lows against it. But as we did see, the relationship was very negative. We do have somewhat inverse head and shoulderish here, but the problem with this inverse head and shoulder is that the right shoulder in this case is significantly lower than the left, and that is a weak inverse head and shoulder, meaning it is an inverse head and shoulder that is less likely to be beneficial to the bulls. So if I were to sum up my take here for this ETF, the technicals here is that we are extremely oversold, and we have been that for a long time. The key thing of that is that on the daily data points, the purple 20-day moving average, it has been this very clear line in the sand. If we do get enough bulls buying support at that level, then that will, it will help form a low. And so it certainly looks like an interesting speculative entry opportunity at the moment, as long as it holds. In terms of seasonality, we have so little data that I don't think we can jump to any conclusion at all. In terms of the fundamentals, it is a bit more tricky to do fundamental analysis, certainly comparisons between an educational technology ETF and consumer staples broadly, or the S&P 500, because the business models are very, very different. So if you are going to do those kinds of comparisons, then at least the business model should be similar-ish. Hence, what we did see in terms of the fundamentals, it is to be expected in these kinds of sectors. When we did the comparisons, we did see that there is some trend change at the moment. There's been this massive underperformance of this ETF, not that long way back, but now there's some change in the air. So to sum up my take, I am more bullish than bearish on this ETF, but this is obviously a very speculative bullish thesis. The paradox, of course, of the market is that if you see a low and you do not become bullish, then that will not help form the low. So lows are only formed when the more daring bulls go bullish, and then the other bulls follow suit. If the daring bulls do not turn bullish, then it will just go lower. So that is what's very frustrating about the market, but that is just how it works. Lows are only formed, obviously, if people turn bullish. So I think that this is an opportunity for the bulls, so that is why I wanted to highlight it. The 20-day moving average, it's such a key level. And yeah, I think that, the bulls, they have earned, after all of this suffering, they have earned some support here. But as always, we always use stops.